everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures market and crypto outlook for tomorrow's trading. That's going to be the 6th already. We're wrapping up the first week. We're going into a holiday weekend. Don't forget, the 9th is Columbus Day, and that does mean that the markets will, depending on where you are in this world, the markets will be closed or at least very, very slow. So going into a holiday weekend, generally Fridays tend to be a little bit slow and grindy, but we do have some news going on tomorrow to kind of help things along a little bit. Now, starting off on the euro, looking at the bigger picture, we're working our way down into a descending wedge. We've been grinding our way down for the better part of, well, really since about the 20th of last month, and there could even be a larger wedge coming across the highs that we have yet to hit. But when we start zooming into something like the 5-minute chart, we can see that a lot of that action took place right around 9 o'clock. We started the day off with mostly a range, not really a whole lot being contributed to the market. They took a quick dip lower that ended up being a trap low, but that big rocket ship to the upside, where did the buyers go, right? Why did all of the buyers all of a sudden just lose total interest? And then it collapsed down to the lows. A lot of the buyers started getting nervous. They saw this big drop lower. This push higher might have just been their opportunity to get out at break even or close to, and that ended up driving the market very aggressively down. Now, the overall sentiment is still, in the bigger picture, bearish, and with that bull cycle up, a lot of sellers may have just been selling into it just to get better prices on the bear trend. But when we zoom out and we look at that larger time frame, where are we right now? Right? Well, we're floating right around those major lows that were put in before. You can kind of see that low edge. We're running directly into it right now. So even though we are bearish, you can see the market is running into a little bit of a problem. We're seeing a lot of sellers that are probably taking profit. They sold off of the highs. They're taking profit down here. We have sellers who've been selling for the long term. We're back to lows. They're probably taking profit. So we're running into a situation now where the downside is not necessarily minimal, but there's just not enough room for a lot of sellers to start getting involved. So in reality, that basically tells us that we need to look for better prices. If sellers aren't interested in breaking out the lows, then we have to look for the next available thing, which is generally pullbacks and retracements inside of the move. In the overall downside move, that did leave a pretty aggressive downward channel, and we can see that nice little channel forming inside of there, maybe even a potential wedge, and we're just going a little bit sideways inside of there. So the original area of range, a break above that is going to be the first location that sellers will start driving in. Now, that's going to be around 17,560 to drive the market back down, but if we can get a slightly larger correction, we have this major swing before that drive down, and notice if we go and kind of draw a line across there, we have swing low, swing low, swing low, swing high, swing high, swing high, swing high. You get the idea. So if we can get the market to pull back all the way to around 780 or so, we could have a very nice potential sell move off of there instead. That would be my preference personally. I always like trying to get the best price possible, and that looks to be about the best price that we can go for on the euro. And again, the main reason behind it is when we're looking at the bigger time frame, we're smack in the middle of an area that I don't want to sell anymore. We're already at the bottom. It might go a little bit further, but it's going to have a much harder time here. So with this big strong leg down, I still would anticipate one more leg lower, but I would love to see an intercorrection inside of that to get some better prices. Over on gold, gold for the most part has now broken down outside of the wedge. We had a wedge on the larger time frame. We're grinding higher. They closed outside of it. Generally speaking, one close isn't good enough. We need a little more proof than that, and we have now had 3 closes working on our 4th. That's a really good clue that we are working to grind down. Major resistance at 80.9 has held so far, and now with this strong breakdown, what I would really like to see on any wedge is to see a breakdown into a correction and sell the retest of that wedge. So when we zoom into the faster time frames here, we can see that this drive down, a lot of that happened as well right at around 9 o'clock, and it's very parabolic. There's very little correction inside of here. It just aimed down and kept going, right? It just didn't stop pummeling through the downside. And now when the overall move is subsiding, or at least finding a little bit of a stall, we're seeing maybe a sign of that in the sense that they really hammered that bottom edge, and that could be a sign of exhaustion. They want to correct back up. We're looking for that retest of the wedge. Now, kind of eyeballing the way that this looks from the highs down to the lows, right around a wedge test, is pretty close to 50%. And if you look at some other clues that the market may have given us, we have several swing lows that are cutting through here as well. Not only here, but also inside of here. You can see the amount of wicks that came off of that. When it finally broke, they use it as resistance. So we not only have the wedge bottom, but we also have the support level at around 75.8. That gives us a really nice location to try to drive the market down, with both the swing traders jumping in, the wedge pullback traders jumping in, and the Fibonacci traders jumping in. They're all hopping in right around the same place if we can get the correction back up. So it looks like a hot spot for some selling pressure to drive the market back lower. Overall, very aggressive leg down, just like we were talking about in the euro. Very difficult to not see a second leg to this. It would be very surprising. With that amount of aggression, really, it's just a matter of time. Let them correct back, tap that area, and drop it right back down to a new low once again. Now, when it comes to gold, I'm not really looking for major lows, right? This is another market that has been bear trending for a very long time. This is certainly nothing new to gold over, well, since really the beginning of September when it started turning around. We haven't stopped going lower. So with that, we're also kind of in an area where how much lower can this go? Now, you don't ever want to try to pick the bottom. Just look at trying to pick the top on the S&P over the past couple of weeks. Probably not the best idea. But the overall ideal behind it is that, well, we might want to be a little bit careful. Instead of getting in, shorting, and then looking for a huge runner target, it might make a little more sense to jump in at a better price and then start looking to liquidate as it nears those lows instead. We have a much higher probability that we're going to start transitioning into a range sooner than later, the longer this trend goes on, and that's kind of what's sticking in the back of my mind. So at the moment, what I would like to see is a correction back up to retest that wedge and then drive the market back down from there. On crude oil had a phenomenal bounce all over the place. If you were following me on my Twitter page, we called not only the turn here, but also the secondary bounce here. Just a beautiful couple buying opportunities to reverse the market back up, along with zooming out the larger overall bull trend. Remember, we don't want to pick the bottoms in a bear trend, but looking for bottoms in a bull trend makes a lot more sense, and we are around those areas of interest. Now, we have broken above this wedge that we have forming here, and for the most part, we are holding this as support. But if we zoom in a little bit here, we can see that the support isn't exactly the strongest thing in the world. These aren't some, hugely bullish candles that I would just love to pour money into. That's not the case right now. We have very weak bull bounces. We are getting the bounces off of there, and they are working nicely for some scalping opportunities, but we're not getting those big bull bars to really show conviction to the upside. And that leads me to believe that we have a little bit of a fist fight here. We have sellers who are selling above this little ceiling that was put in, assuming that this breakout is going to fail. They're trying to drive the market down. On the flip side, we have buyers that are looking at the bigger trend saying, well, this is the first time they pulled back in a month. We're finally in an area that makes a lot of sense, and they're buying all over the place down here. So we're in a little bit of a fist fight. Once we can start disproving the sellers, then we have a real good shot at pushing back up to 53s towards those highs. In order to disprove the sellers, I think what we're going to need to see is not only a hold here, or maybe if they want to try to get down a little bit further, fail and go back up, but start breaking above 51.22 and holding their ground above there. Breaking above 51.64 is almost kind of like the last line of defense for the sellers on a rally higher as well. So if we can start holding some of these pullback areas, we could have a really good shot at the upside. Right now, I think we're just trying to buy cheap in a move on a potential correction to push the market back up towards the highs, but we haven't really disproven the sellers yet. I'm sure they're not feeling great right now with that big rally up, but at the same time, well, they haven't necessarily had a big reason to jump out yet. So we have buyers that are assuming buying pressure at around 50.59, maybe a little bit lower. I still like the buy side a lot more going with the longer term trend, but it wouldn't be a surprise to see them dip down into the major buy zone between 49.56 and 49.19. Now, bumping into a little bit of a faster time frame here on the 5, we can see a huge rally to the upside, and they are correcting back down. And notice where the correction is finding a little bit of a base. It's at the bottom, or near the bottom, of this huge bull candle that kind of kicked the move up off. That happens very frequently. Whenever you have a big move that's going on and it's all started with a big candle that really got things going, they tend to kind of bracket the highs and lows of that candle. And you can see even the highs acted as a level of support and resistance. So as we start dipping lower, I would love to see supported around, well, 55 or so, towards the low of that candle, 55, 56, and then looking for some bouncing pressure back up. Again, the buyers are definitely going to be in this looking for the move back up towards the highs, but we have to disprove the sellers a little bit more to really kind of shake their confidence to get them to jump ship. And then finally on the S&P, shocker, went up again. This thing is just an absolute rocket ship right now. You can see right in the bottom right there, they're talking about how the S&P 500 posts best record streak in 20 years to the upside, just constantly breaking highs. There is a little bit of a concern though. When we're looking at this overall move to the upside, generally I want to see price stay within the bounds of the channel. When we start breaking out of it, that's when we start being called to action, right? Now we're looking to buy off the lows, start selling out at the highs, etc., very common knowledge stuff. But now we have a bull trend that's been going on for a very long time, and we're getting a bullish breakout outside of a bull channel. That typically, most of the time at least, 60-70% of the time, is seen as a low probability scenario. It's unsustainable movement. The buyers have been buying this entire time up, and now they're making the strongest push of the leg after the trend has been going on for this long. Raises a little bit of a flag of concern for me. And if I were a buyer, an example, and I've been holding since down here or really anywhere along the way, I see this, I'm going to start exiting and taking some profit off the table. It just makes sense. So with that being the case, we're likely going to see a little bit of a correction. That correction could be back to the top of the channel. It could be all the way down to the lows of the channel. And then we start thinking, well, overshoot? Could be the scenario that we're looking for there. We can't jump on the sell side, okay? I want to clarify. I'm not looking to sell this in the least, but I am looking to buy it with potentially deeper prices, right? Buying at a better price, knowing that we are a little overextended here on the index markets. And that's not just the S&P, it's the Dow as well. The Dow is an absolute rocket ship to the highs there too. So in reality, jumping down to the 5-minute chart, I want to be buying as cheap as possible. Right now, the obvious thing that stands out after that monster rally to the upside would just be simply a trap underneath those lows. Looking for around 25.47, 46.75, somewhere around there would be a beautiful potential area for a secondary bounce in the overnight session to the upside. Aside from that, other than looking for those quick little bounces, we're then looking down to the bottom of the channel, or again, to the bottom of the larger channel, and then deviate its way lower through there. This is a very bullish market. I'm not looking to sell, but I am going to be looking to buy at some better prices because, well, can you blame me? I want to try to get as good of a price as I can when a market is parabolically bullish like this. So overall, really just kind of waiting for a pullback to take place here so we can buy in at some slightly better prices on most of the index markets. Taking a look at the news for tomorrow, the news at 8:30 tomorrow morning out of the U.S., we have the non-farm payrolls for September. Obviously a pretty big deal. Those are forecasted at 90,000. The previous is 156,000. Along with that at 8:30, we also have the unemployment rate for September forecasted at 4.4%, which is unchanged from previous. Now, we also have news coming out of Canada at 8:30, and it's their employment change for September, forecasted at 14.5 thousand. Previous was 22.2 thousand. And then once again out of Canada, but a little bit later, at 10 o'clock, we have the IVPMI for September, forecasted at 57.2. Previous was 56.3. And again, don't forget, Monday is a holiday, so we're going to be, well, a little bit slow might be an exaggeration. Depending on where you live, some markets might be closed for you. It's just going to be likely a pretty big chop fest. So long weekends going into a Friday. Non-farms on top of that, we could see a lot of early in, early out kind of traders that don't want to hang around for too long. Now, over on the crypto side of things, we have Bitcoin rallying back to the highs. Once again, a beautiful buying opportunity off the lows that we were talking about on our Twitter page and our chat community. If you didn't see that, well, you missed a couple different opportunities on the way up. Beautiful rising to the upside. And now, potentially, we're looking for a slightly deeper pullback. We're back above the major area of support and resistance at 42.6619. We had a huge leg up, they followed it up with another leg, and we're right around that previous level of resistance. All these swing highs coming through the exact same place, and we're back there again. So what I would like to see on Bitcoin is a continuation, obviously, up to the 4,500 or so, maybe even further. But a quick pullback down to 4266.19 would be a phenomenal area to catch the market to rise back up towards the highs and finish the job off to 4,500. Everything is looking really, really strong to the upside here on Bitcoin. It's just a matter of where they want to show some continuation. Switching over to Bitcoin Cash, we're dropping still, but we are pushing into the 786 on the fib side of things from the overall swing low to the swing high that formed back in kind of mid-September. The 78.6 is usually seen as the last line of defense for buyers, and if they start running out of support there and we begin breaking through with a little bit more conviction than we already have, then we are pretty much open territory to the downside to start breaking through the lows. Now, as it stands, this is a very bearish market to the downside. We have plenty of objectives lower, and the market is still just kind of falling. We're not following along with the Bitcoin market. We're not really doing anything related to it. And again, a lot of that could just be concerns for Bitcoin Gold coming out later this month on that little bit of a fork. But right now, where it stands, this is the last line of defense for the buyers at 355.51. They need to hold this, and if they start losing their grip, then we start looking for a possible slip down to the lows at around 320 for more continuation. But in all honesty, with Bitcoin Cash, with Bitcoin Gold around the corner, I'm not that interested in playing anything on here until I see what happens between those two. On Ethereum, we're just kind of ping-ponging around 300. We're rallying back up towards there. We tried breaking above the 300, if you mark that level up, those big round levels. We had resistance, support, resistance, support, resistance. You get the idea. Major area of interest. And now we're bouncing off of the lows of a channel. This channel has been in play for quite a while, rallying its way up, and we're finally seeing a bull bounce back up again. Now, this is off the original buy area we were talking about back on the 28th for continuation to the upside. So this certainly is nothing that is coming as a shock to the Ethereum traders, but you know, what we're looking at right now is a good continuation to the upside. And a couple things that stand out with such a strong rally to the upside, first of all, any pullback buyers are going to be really anxious about. But then also looking backward a little bit, we can see that there was definitely something here. We had a little bit of a ceiling that got put in there. We have a swing high, swing low, swing high, swing high. They even stalled out there again. I would love to see a snap pullback to use that area as support, and that's right around 294, so we can get more continuation to the upside. In the long run, we are starting to break out above the wedge highs, and this is where the buyers really need to make their stand. If they're going to keep this going to the upside, they need to hold it above these highs at 296. Well, really, anywhere above 295, really, for continuation higher. But for the most part, looking for a quick little pullback for some buying pressure back in. Over on Litecoin, we are now finally pulling out of the major buy zone that's been marked up for quite a while. This is a huge zone. So far back, I didn't really even want to bring the box back that far, but massive amounts of swing lows and swing highs that are formed inside of here. This is a buy zone for me, at least, and I'm looking for continuation back to the upside. I see this area between 51.20s down to 50.20s, that dollar range, as a monster area of support. As long as we stay above this, we are bullish in the short term, and we are looking for continuation to the upside. At the very least, buyers have already bought into this move, and they're looking for some minor profit targets at the top of the spike in channel, right? The spike in channel highs. And the next objective would be the larger wedge top beyond that. After that, once we can start breaking through some of those levels of resistance, then we may be looking to target 55s going up to 60. But until we start breaking through these, it's going to be a tough time. I think we're rotating right out of major buy support. It's just a matter of how long we stay here and if they pull back again to reload more buyers. So really, it's just kind of a waiting game. Neo with a beautiful bounce to the upside, catching the low end of channel support and really just shoving the market higher. We had this earlier kind of wedge sort of pennant formation with these double bottom lows. This breakdown below the bottom was nothing more than a failure, and we are rotating back up. We came down, tested the $30 level, didn't quite get down to the 25, 26, I mean, heck, even 27. I'll take anything below 30 I'll be happy with. But we didn't quite dip down to that low. Now, we were talking about this buying area as well, and that did procure a beautiful bounce to the upside. Now that we're breaking back above that minor level of support, well, in this case, I don't even know if I would call it minor anymore. We've broken above it, now we're looking to use it as support to continue higher. And you'll notice we're kind of forming a separate kind of pennant here, with the earlier support and resistance coming into play. really, if we can break out of the highs of this, we should be all systems go to the upside and looking back up to 40 and maybe even a little further. But right now we're running smack into resistance and it is not letting loose yet. There are too many people taking profit here. There are too many people selling. It's better to wait for a breakout. And if we can get that breakout to happen in a very specific way, if we can get the breakout here, right, and they kind of meander around for a little while, that's fine, but then pull back. Notice what we get here. We have horizontal support, we have rising support, and we have falling support, all coming in the exact same place. And that, my friends, would be considered a kill zone to jump the market back up from there. So obviously I would love to see this, but if we get a strong close outside of the falling resistance, that might be all they have left before the sellers give up and the market rockets to the upside. So that's going to do it for the outlook across the board. Overall, with everything going on tomorrow, we have plenty of stuff to keep our eyes on. But keep in mind, we are going into a holiday weekend. We have not a ton of news that are going on for the U.S. session aside from non-farms. Once that's done at 8:30, I would wager a guess that most people are going to call it quits and head off to a long weekend to wrap up the week. But regardless of the market that you're approaching, always make a plan. Always, always, always. Trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all later.